Feels like what, like 2 weeks now since you were last here?
Yeah. It's been like a little bit over 2 weeks, I believe. And the last time we talked about our service and everything, but I wanted to do another one and talk about my strategy, show you the returns that we closed for 2024. And I want to show my strategy here for people to know that, you can swing trade stocks, you can trade them on spot, and you can get awesome returns, awesome risk adjusted returns, which I believe are the best returns. The amount of return you get relative to the risk. So I believe we can get started whenever you want. Russell, you tell me.
Yeah, it's just give people a few minutes to get in, just to kind of chill out, and just going to post the link to go and check out the website directly, just in case they can't read some of the stuff that's actually on the screen. So I'm just going to post that for people now. Say hello in the chat, guys. If you're around, say hello. Felipe has been just awesome. So we've had several people sign up for his service over the last couple of weeks, and so far the reports have been fantastic. So everything's been really good, and I know a lot of people are really happy with the service so far. Tonight's main sort of idea, though, is to be more of a masterclass than a sales presentation. So you've got the opportunity, the link that I just posted in the chat here, to join. It'll be in the description below if you're watching the replay. To join his service. We're going to talk about that a bit later on. The real focus for tonight is for you guys to be able to ask Felipe questions about his strategy, and for him to outline basically how he made it was 106%, right, over the course of 2024. I know you love to get down into the decimal points, but
Every single point counts, Yeah.
Right. So I think tonight's going to be really interesting because it's going to be more of a deep dive into how that's actually possible rather than just like join the service. So we're calling this a masterclass rather than just like a sales webinar. So hopefully you guys get some information out here. Feel free to ask as many questions as you want, and we'll answer them as we go. But I think as it is, we have a presentation ready to go. And I'll keep an eye on the chat channel, and Felipe can just start his stuff, and we'll just go from there and play it by ear.
Awesome. Well, I will get started quickly talking about, first of all, who am I? Why should you listen to me? Which is a great question. Well, first of all, I've been trading for the past 12 years. So I'm a professional trader. I manage a small fund as well. So, the strategy we run here on Liberty Signal, I trade on my own account. I trade for my fund, and also subscribers get to benefit from it. And again, I've been trading for 12 years. I started off trading futures and Forex. In the very beginning, it took me 4 years actually to become profitable. At the beginning, I made many mistakes. Obviously, I lost a lot of money. And I made all of the mistakes that most people do at the beginning, obviously, which is just, at the start, learning every single system there is, every single strategy, trying to do everything at the same time, not knowing why I was losing money, why would I have lost some trades. I was not understanding anything about statistics, expectancy, building a trading system. So over the years, I just went through, I've been through over 200 books on trading. I say this in a proud mind because I have gone through every single book you can find on the internet about trading, every single author, all the way from the 80s. So I know my stuff. I know this stuff works. I've been trading it for the past 5 years. And now, obviously, I want to quickly show you through the performance of 2024. And I want to focus on this presentation on show you my system, show you how I trade, show the trade mechanics, the reason of why swing trading stocks. Obviously, I know many people trade here options, but this is a great complement because option traders, most of them tend to sell premium, which if you know what you're doing, it's profitable. And if you can also add this type of strategy, which is more directional, I can show you how you can make awesome risk, asymmetric risk reward trades, and you can really get a good returns. So let me quickly show you through the performance right now. The Signal's performance for 2024, it's been 106.89%. Here are the quick stats on the equity curve from the 1st of Jan to the end of December. We got a total return again of 106.89% with a max drawdown of 5.35%. I believe that this is super important right here, 5.35%, because that's the max drawdown we got during the whole year. So we're talking about excellent risk-adjusted returns. That I believe that's the major job of a trader is to get the best returns with the least amount of risk. And the number of trades was 200 trades over the year. We averaged 20 trades a month on average. There are some months that are less, and there are months that are more trades. So it really depends on market conditions. And I'm going to talk about how this behaves on different market conditions. We get a percentage positive trades. 65% is the average. We got 67% for 2024. And then again, a very important metric is percentage profitable months. We got over 91% of profitable months, which just simply saying we only lost money on September. And right here, you can tell all of the reports from every single month with all of the trades, the date, long or short, because we also go short, as I'm going to be explaining in just 1 second, entry price, exit prices for the system, and the returns based on a 1% risk per trade, which is what I recommend for most people, obviously, to get the maximum amount of returns while keeping the risk and the max drawdown in line with what we want, which is keeping it very, very low in the single digits. So if you go on the link that Russell just put on the chat or below this video, you can get it. You can watch every single one of these reports and go through it in depth if you want to study every single ticker and trade that we actually sent and it was executed with the results and everything. So it's pretty cool. I will show you later on where we place our stop losses, how we manage the trades and everything once we get into the charts. So before we get into the charts, which we're going to do right now, I want to quickly go through what is swing trading and why should you really care. Are there any questions up until this point, Russell? Is there any question?
Nope. Everybody's just keeping quiet. They're watching, but they're not saying anything. So
Awesome. Let's go. So swing trading stocks, what is it all about? Well, in every single stock, you will see there are obviously going to be trending periods. Within a trend, swing trading aims to capture the fast portion of the move. You can see that if you pull up a stock of any stock, you will see that it has an uptrend. There are periods where the markets move quite aggressively for around 5 days, and then it stalls and creates a consolidation or moves down or gets into a range. But when it moves in these movements of around 5 days. Really depends on market conditions again, but that's the portion we want to capture. And swing trading is all about getting that asymmetric risk reward. It's getting on that fast portions of the trend with a very tight stop loss and aim to get a good risk reward ratio on our trades. That's why it's so great and it's very profitable, and that we keep our expectancy very, very high, which is the relationship between the success rate on your trades and your average risk reward ratio. So if you get that relationship right, you can make a lot of money because it's just a system. Although we have 35% of losing trades, over time, if you execute the sample, you will get profits. If you just look, at the monthly reports, there are months of 4.4 over 4%, over 5%. March was a great month of 20% actually. April 13, 11, 6. September was the only losing month of the year, minus 4.5. But then on October, and this is very common. Once you get a losing month, it's very common to have the next month really come up with the recoup those losses, just because of the fact that if we are getting losses, it's because the market was too volatile on that period, and it's very common to then get a resolution either to the upside, like we did on October, which was a bullish month, or a resolution to the downside. And we also profit on downtrending markets because we do swing trading. Another advantage is that it works in every market condition, meaning that we make money in bull markets, we make money in corrections, and we make money on pullbacks of the market. Now, there are some periods, just like September, as I mentioned, which are too volatile, where you can profit on swings on the long side or on the short side. You can do it. You will get, if you continue to execute on these trades on those periods, you're going to get, you're going to get loss after loss after losses because the market is not on your back. So I'm going to show you my process and how to actually, I go through breadth of the market as an indicator I use to see the health of the market and which way I should be trading. And all of this, the systems, all of the backtesting I did, I worked 2 years to develop the system before trading it. So those are subscribed to Liberty Signal, they get the benefit of really getting all of the benefit without the work, really, because I also apply some discretion at the end of the day. Once I get, for example, 50 breakouts, I know the top 2, 1, or 3 breakouts which are going to work great, and those are the ones I send to subscribers. So That's are the trades I really take, obviously. So there is a lot of work going behind it, and I know that maybe there are some people from Liberty Signal that are on this stream right now, and they can say it them for themselves that it's very simple. Just do it. You just follow the signals, and you're trading with expectancy. And you're trading based on a system that it's used to run a fund and trading professionally for many years. So you are in good hands, obviously. So before going into the charts, there is something you might want to ask Russell or say something.
Quick question. Hopefully, this doesn't throw too much of a spanner in the works, but we have a guy who is saying that he's looking at the November results and the prices didn't make any sense. So you're going to have a better idea of what that means. I'm not quite sure why they won't make any sense. If you zoom in on the November, yeah, let's see what he's talking about.
Yeah, sure. What's the question?
So he just says they don't make any sense. So I don't really know what the question is. Do you want to elaborate? And
if I can have an exact question, maybe we can go over it. And if there is something that don't make sense, I can pull up the chart and see it for ourselves. That would be cool.
So he's saying, look at VR. So the top one, VRRM. Look at VRRM price. So if we look at the entry price and we look at the exit price, and I guess it says minus 1%, even though it was
the price is the same at the entry. Yeah, it's logged in wrong. 1 second. Let's pull up the chart. VRRM. Can I share my screen right here? Give me 1 second.
He's also saying DLR as well, but let's do one at a time. This might be a long session, but hopefully it gives you guys a good insight into the.
Yeah, we'll review it every single trade one by one. That's great. That's awesome. Give me just 1 second. Percent. I want to change my percent trading view. Do you know how do I do that right here, Russell?
I don't see your trading view at the moment. I still see your well, you've stopped sharing your screen now, but I still saw your website there. If you want to share your trading view. So it looks like Yahya, and I hope I say your name right. I know you're often on these calls, but
this was the trade here, and it was a loss. At the moment, obviously, I believe there was VRRM. Let me check.
And he's saying, so short at 170, and it's 25 now. It has never been 170. So I'm kind of confused.
I don't know if it's logged wrong, because obviously this was a losing trade, just like it says right here, it's a minus 1%. I don't know if they actually did, if they did a split, if they did it, and if not, the numbers are logged wrong. I will check that, but the return of minus 1% is right. So that's, it's a losing trade. But I have to check this if there was obviously it's logged wrong right here. The exit price should be higher, obviously, because it's a short. But I believe that the two prices may be wrong if they didn't did a reverse split. But the result, which is the important thing, it is minus 1%. So it's a loss. It was this day right here on November 2024. This day right here was the signal. Here was the entry, and we got stopped out at the fourth day. This day right here.
Okay, interesting. Yeah, we're getting a lot of stuff now as well. Apparently, there's a problem with DLR. Apparently,
DLR. It was an awesome trade. Let me check. I remember this long trade right here. Yeah, this was an awesome trade. I'm going to use this trade as an example that we took right here on this day. We bought at 183.35. Again, I don't know if have any splits or something. Yeah, I don't know if they did if they split or something, but this was the trade we took right here. We placed an entry at the close of this candle, placed the stop loss below the low of the day, and we exited at the end of the fifth day. Of course, I'm not showing right here the exact numbers on the fields, obviously, but it was around a one. Let's see here is exactly, 2.17%. This is right. This was the trade right here. And I'm going to also use this as an example later, if you can remind me. Once I start talking about the strategy, it's a great example. I wasn't planning to talk about this one, but it's a good example because we have a gap on earnings, a consolidation into the EMAs, and then the breakout. So this is a good example with having gaps on earnings. So I'm going to talk about this also. So
Cool.
it seems that we have to correct this right here, but the returns, the return per trade is actually right. I can assure you that because that goes directly from my trading account. So no mistakes there. If there is another one that I want to get to check.
Yeah, there's a few comments. I'm not quite sure what to make of it. Said so.
Oh, it's awesome because this also shows the example of trades that we actually took and everything, so people can see them. Meanwhile, so it's cool. I will correct this. Thank you very much for the someone that actually pointed out. That's awesome. That means that you care about the data. I love it. But
no, I know this is great about sessions like this we're getting people that are really diving into here and spot mistakes. Like Mike saying, I think somebody copied the table but didn't update the numbers in the table from the previous month. So that's fine. People make mistakes. I see it all the time. It's easy to do. So
it was clearly a mistake on the prices, on the interest and exit prices on these two trades. But I remember these two trades, especially DLR, because it was a nice profit trade. I remember that one. So it's this one. So we can check the entry prices and everything. I mean, the trade is there, and the total portfolio P&L, I can assure you is right because that goes directly from my account. So 100%.
So that's the key. So it comes directly from your account because I think that's what people are seeing. Like this one with GMED long at 501, and it's now 95 unless if there was a split or something. So there seems to be some mistakes in the thing, which is awesome that people are spotting that. But the key thing is it's coming from your broker, right? The actual results are true. You really did make the 106%. It's not like the mistakes are making it seem like you made more or less than you actually did.
Yeah, GMAD. This is the other trade right here. Another one, gap on earnings. It was this consolidation. Of course, it went through all my criteria, my filters, and this was the breakout candle that gave us the entry right here, and we exited. Let me just pull it out with the risk reward tool. That's great. That means that people are paying attention. I love it, and I'm going to change that. Obviously, 345. It was around the close of this candle. I don't remember exactly the exact fields, but it was a 0.46% trade based on our risk, which, it says 0.49, but obviously this is the correct number. So the total portfolio P&L is going to be right. I can assure you that 100%, but I'm going to correct this. Yeah.
Okay, great. Well, let's move on after pointing out all your mistakes in your spreadsheets. It's not a great start to the whole thing with the
typo
here, the typo here.
It's not going to be a mistake. I can assure you that.
But yeah, no, that's fine. That's good, and it shows that you're not just brushing these things under the table. You're not making numbers up, which is the key thing here.
Of course not. If I would be making numbers up, I wouldn't be here. I can assure you that.
Exactly. Okay, cool. Well, let's move on with the presentation. You guys can point out more mistakes as we go.
Yeah, awesome. And in fact, I'm going to start with the charts right now. Anybody can see that, right?
Yep.
Awesome. Well, the strategy itself that I used to run on Liberty Signal, it's obviously momentum breakouts. Momentum breakouts, this was a great trade, KULR. This was a great trade that we showed, I believe, on the past stream as well. It's an excellent example, of course. I mean, not every single trade is going to be like this one, just like you saw in the past ones, you saw a trade that was minus 1%. Another one was 2-point-something%. Another one is a little bit below 0.5% of profit. So overall, the average risk return is 1 to 1.35. And the success rate on the trades is 65%. So those are the stats that on average show the expectancy that we are making money, obviously, and we make money mostly, I would say, based on data. Let me just check. I have it right here. Yeah, on this year was 91%, and the average of the system is 87% historically. And you can see there is an equity curve which I have to update also, which is this one, which is from the inception of the system since 2010. So, and just for you to know, we also averaged 64% per year since 2010. So obviously 2024 was a great year. The indices were doing over 20%, I believe, or a little bit more. So we outperform aggressively the indices because just swing trading, it really is the essence of that. It's really going for that fast portion of the move, getting with a very tight stop loss, going for that asymmetric risk reward, and compound the gains. Compounding those gains is what really gets the outperformance, and you can outperform buy and hold. And that's the whole point, again, of doing this and actually being there on the market. So the strategy itself, it's momentum breakouts. It just, if everything comes when the market is, first of all, is doing nothing. So you will see on any single stock that it's in a consolidation. For example, this stock was right here within this big range. You know that at this point, buyers and sellers are in agreement of price. There is no deviation of it. You know that between these two values, it is what is called fair value. So that's why the stock never goes above or below a range once it is established, because there is no belief that the stock is going higher or lower. Then obviously something happens, and it's every single time something happens, and a stock makes a first leg of a move. Big breakout came from this day right here, which was actually done with huge volume. You can see that the relative volume was very large, and it started this first leg of the move. So at this point, we know that bulls are in control, and this stock is going up, and there is an interest and there is an expectation that the stock is going to go higher. So after the first leg of the move, it comes the first consolidation is the most important part of swing trading. Right now, we are transitioning to a second consolidation, when this one is going, obviously was a much deeper pullback, but we want to focus on the first consolidation after the first leg of a trend is established. So first of all, the golden rule I like to follow with stocks, whether it's going up or down, how to identify a stock that it's primed for a swing trade, for a breakout in just 2 seconds or less, is very simple. What I use is a combination of indicators with my own custom indicator that once I see it on a chart, because I'm scanning at the end of the day and I'm looking like 200 charts at once and going like one by one quickly, and I need to find those to enter and send the signals on, obviously, because the signals are generated at the end of the day. By the way, if people go onto the site, Russell, with your link, which you could just put in the chat or below, that there is a learn section where I have a masterclass just like this one, but it's expanded, of a little bit over 3.5 hours, where I go in depth from the beginning until the end on the process, the strategy, very in deep. But of course, right now I'm still showing you the strategy and everything. But if you want to go deeper on that, that's a course that they can go and check out. I also have a lot of articles and videos on the strategy if you want to go even deeper on that. So we were right here, the golden rule. The golden rule is taking the 8 exponential moving average and the 20 exponential moving average and the 50 exponential moving average. Once all of these are stacked up and they're trending to the upper side and they have slope, it means that bulls are in control. I also have a custom momentum and linearity indicator I developed, and this indicator really came off studying 9,000 stocks in the past 3 decades, and that's where I really come up from my rules, is studying historical data, building a model, building a big set of rules that when applied, I know that I'm going to get a big probability breakout. So this is something that might differ from what most people are used to, that is just trading on the fly based on a methodology that you see a concept and you just trade it. I trade with very strict rules. There is about 5 to 10% discretion on choosing which ones to take, and those are the ones I send out on the signals, and they really are based on market conditions, obviously. And I'm going to talk about later, Russell, on the actual market conditions in January, that we are profiting on Liberty Signal. We are a little bit over 1% in profit from the signal. So, we started off with the correction, and everything is very volatile. And I believe that on next Monday, once Trump gets into office, things are going to change quickly. And I believe the market's still going to go up, but I don't want to go ahead of myself. So once we get the 8 above the 20, above the 50, that trend into the upper side, and we have our custom momentum and linearity indicator flashing green, this means that we have a first leg of a linear trend. Linear means basically you will see that when there is no overlap, the quickest way to describe it is that when there is no overlap in the leg of the move. So in the first leg, we'll see that there is no much overlap between candles, and this one here also, there's no overlap. This means that the trend is very strong and one side of the trade, either bulls or bears, are heavily in control, and it's very difficult for this to reverse. So after the first leg, a new major higher high is established right here, and this is where you start to look for the consolidation. So consolidations, the basic rules that I have. Of course, I have a lot of rules on how to decide on a good consolidation, but what you want to see is a orderly consolidation with higher lows. So you want to look for swing points with candles that they're showing higher lows. This means that obviously buyers are in control and they're getting tighter and tighter at the end of the consolidation. Any type of consolidation that I'm seeing at close below the 20 exponential moving average for long trades automatically gets discarded for me. If a daily candle obviously closes below the 20, I don't want to mess with that. It just shows there is a little bit of weakness, and that the probability of a breakout happening after that goes down dramatically. And I say this from data. I know this from studying a lot of stocks on many decades, many market conditions, and I know that that's a simple rule that really gets the success rate to the lower side when trading momentum breakout. So once we have the higher lows, yes, Russell.
Sounds good. Sorry, I'm just going to interrupt you when we get a chance. So, because you said, that we should do that just to keep you on track, sort of thing. So, Yak is saying, what do you mean by overlap? And you're talking about the overlapping candles. I'm assuming you mean candle over candle. So there's not so much like overlapping candles. They're more like one and then another one above it, then another one above it, then another one above it. Like momentum.
Exactly. And there's a mathematical formula that goes, for example, how I built in my custom indicator to show me this instantly. There's a mathematical formula, and it's everything about, the lows over, you had two candles. It really depends on the overlap between the highs of the candle within the other high of the candle, if that makes sense. For example, here there is very little overlap. I mean, there is a lot of price that it's going through in a very short period of time. That's why we get these linear moves. For example, if just to show you an example, you can see that this right here, this leg, it might seem like a strong leg, but you can see that there is a lot of overlap between candles. You can see that we have on this leg, it is strong to the lower side, but you can see like 1, 2, 3, 4, 5 candles that are just in the range of one single candle. So although this leg is strong by itself, right here also you can see that there is overlap between candles. It is not linear. With just looking at this, you will see that it's green right here. There is very little overlap between all of these candles on average, because this mathematical formula takes an average of overlap. So just gives you the most smoothest moves that that once you get that linear move with momentum, once you get the volatility contraction, the volatility expansion is going to go on your side 100%. So there's a lot of I'm making it as simple as possible for people to understand, but there's a lot that it goes behind the scenes,
Right. And so while it might not be visually perfect, for example, that second leg up, there's a red candle and a green candle that are side by side. They're not quite like green, green, green. It doesn't matter. Your model is basically mathematical average, so it's still doing better than it would normally. So it's still mathematically, there's less overlap on these candles, even though it's not perfect. It's not textbook. You can't just look at this and go, there's one candle perfect, next candle perfect, next candle perfect. There is overlap, but it's massively reduced compared to what you would expect during a period of consolidation or downtrend or whatever. So yeah, that makes sense to me.
Yeah, exactly. And again, this indicator is built based on data, and it shows me the real momentum and linear moves that have the highest probability of. This doesn't mean that it's going to work 100% of the time. Obviously, we have 65% of the trades profitable, 35% are losers. So you have to go through that distribution of losers. But it's everything about keeping the odds high and keeping the expectancy of the system alive and just making money. If you make enough of these trades over a big sample of trades, you are going to make money. It's just that's trading. It's trading a system with expectancy. You're going to get losing trades, you're going to get winners, and your winners just outpace the losers. Just expectancy explained in very simple words. That's the whole point.
Very cool.
Yeah. So getting into the consolidation right here, I have so much I want to say that I go ahead of myself, and I have so much information in my head I want to give people. So yeah. So after the first leg now, the golden rule is the 8 above the 20 above the 50. Consolidation should not be closing below the 20. my momentum and linearity indicator, the custom indicator is flashing green. So we have a momentum and linear move that we know has a higher probability of breaking out and continuing with that momentum. And then you can see that the volatility contraction pattern is right here, which again, many people call them triangles. Many people call them, there are so many names to these chart patterns. But what I look for to deliver the signal, and based on data, it's a volatility contraction. And the characteristics of this need to be in line with my rules, which again I had derived from data. So I have a minimum. I'm going to speak out some of the rules. I have a minimum of 7 daily candles that should be in the consolidation. Anything longer than 7 days of a consolidation, I'm not interested in it. And every single consolidation that is closing below the 20, which eventually, if it continues to correct over time, it will naturally close below the 20 exponential moving average, because the 20 EMA is just an average of past price data. So mathematically, if a stock continues to get into consolidation, it will naturally get below the 20 eventually. So up until that point, I don't want to mess with that if it closes below the 20. That's another thing that really, if you start to think about it, it's kind of logical. But everything the rules are derived from mathematics. So, but logic is there. It's kind of, you can watch it on a chart also.
It makes sense. So that's something I've always struggled with. Like, I'd call that a bull flag that you've just pointed out there. It's a bull flag, right? But when does a bull flag become a downtrend? That's always been my kind of, my thing. So your criteria is 7 candles and or the 20 moving average. Is that what you were saying?
Yeah, it's a way to get a consolidation within the parameters that will be a consolidation. And if it has a breakout, it has a very high chance of continuing with that breakout, And I know many people trade these breakouts on the internet and everything, but most people struggle to, follow this once market conditions go against them. Most people trade this long only. They don't short. I'm going to show an example how I short them. So, and based on my rules, I know that if I'm getting a signal, I know that regardless actually of what the market is doing, it's a high probability trade for me and I'm going forward. So I have an assurance of what I'm doing, it works because it's based on data. And that's why, many people call it a pennant, a triangle, whatever. For me, it's a perfect pattern based on my data, which of course is the principle is behind is the same, which is volatility contraction. And after, the volatility expansion that comes from the volatility contraction, if there is momentum along with it, and if you get into the right stock, just like this one, for example, you can get a monster move. So the breakout candle, obviously, of the consolidation, it is converging because it's a volatility contraction pattern. And once we have the breakout candle right here, which of course it's just for bulls, it's just a green candle, obviously, the signal is generated at the close of the day. And of course, if we have the past 1, 2, 3 days tight candles, that shows a lot of indecision between buyers and sellers, it's even better because the orders are actually getting coiled. And once bulls are in control, some sellers step in, price starts to go lower, bulls take every single dip in the consolidation, the higher low is established, so now it is ascending, which is it's a very important component. If this consolidation was making a new low right here below this low, I wouldn't be even taking that. So just to give you an example, I want the higher low in an uptrend and the lower high on a downtrend when I'm going short, which I'm going to show an example. So getting at the close of this candle, obviously, and the next day we place the buy limit. We enter right here. Oh, that's actually horrible. Let me just put it again.
Yeah, that's some downside risk you've got going.
Oh. Yeah, trading is not working. That I don't know what is going on here. Yeah, there you go. Never did that to me, TradingView.
You don't want a 4-to-1 risk reward.
Yeah. So the entry is right there. Stop loss, it's always going to be for me. I mean, this is something that it's a non-negotiable for my system, which is if we're going long, the stop loss is always below the low of the day. And if you're going short, it's always above the high of the day of the breakout candle itself. And in stocks, that's why I love stocks. I used to trade futures many years ago, but what I've seen in stocks is that if you enter based on a daily candle kind of trade, the stop loss, it's very hard to be taken out. For example, in this trade, if my stop loss was to be the low of the day of the breakout candle is to be taken out, it's just because market conditions are horrible and every single long trade is going to fail. So that's why we also have a very high success rate. Although I don't know, obviously, if you start to think about a high success rate, 65% success rate, it's high for me based on my average risk reward ratio, which is a 1 to 1.35, which is, so that relationship makes it a high success rate. So that's very, I mean, that's something that stocks give that other instruments might not give. If the low of it is going to be taken out, it's because most longs are going to fail anyway. So this was an actually great trade. This is the trade that saved December and got December into profit. And I know members have taken advantage of this. Obviously, it's awesome when you experience one of these. But the exit is always at the end of the 5th day. This is a very important rule. We hold trades for a 5-day move, a 5 daily candles, obviously. And we always want to close at the end of the 5th day. That's my exit rule. I have backtested it, I mean, so many times before, and I know this works in so many market conditions. You're going to give back, obviously. For example, in shorts, sometimes shorts work too aggressively to the lower side, and you might give back some of that. And on extremely bull markets, strong bull markets, you might give up on some of the upside. But this rule will get you consistent in every market condition, strong bull markets, not so strong bull markets, kind of choppy bull markets, corrections, bear markets. I'm going to show you a trend later, a short we took on COVID on February 2020 on Wells Fargo, which was insane. It was a 1-7 short, but those short trades happen once we get a very strong correction or move on the overall market. Obviously, bear markets are treated differently because the correlation gets too high. But again, I don't want to get ahead of myself right now. The end of the 5th day for this trade was 1, 2, 3, 4, 5 was at the end of this candle right here, and this was a 1 to 5. Yeah, it was a 1 to 5 something. In fact, I have people can go, those are looking at the site, they can go on the report on December and check out this trade for the exact entry and exits. So this is an example of a swing momentum trade to the upside. It is simple, but it's not easy. I mean, in order to trade them the way I trade them, of course, I put in a lot of work to get a lot of rules that they need to go through in order to qualify for a signal, which in fact this one did. And before going to a short trade, to show you the principles, but how it works to the short side. Is there any questions, Russell, or we just kind of follow through? Russell,
my mic was muted there. Sorry. No more questions at the moment so far. One quick question from me is one point is the difficulty is finding these setups sometimes. And that's something that you're providing in your signal service. Do you have a quick couple of points on how you're finding these setups? Like, how are you scanning roughly? Just a quick brief overview of how are you finding these setups?
Well, I'm going to show it to you right now. I'm going to log into my scanning software. So let me pull that up so we can actually show people. But yeah, I have a lot of criteria that I scan for at the end of the day. So I might get like 100 breakouts, and of course I have my own proprietary rules for the system, obviously, which I run for all my accounts and everything. That I select the ones that are the most have the highest likelihood of working. So those are the ones I trade, and I set the signal zone. So there's about a little bit, I would say 5% of discretion on my side to give out the best signals, and also based on market conditions. But let me just pull up my scanning software. It's actually loading right now. So it is called TC2000. Many people heard about this system, this software, which is pretty cool. I mean, let me just share my screen so people can see it. Percent, stop, percent once again, and I'll show you. Here it is, TC2000. So this is my software that I use to scan. Obviously, I have my bull scans, my short scans, and my ETF scans that are on a separate list to a different criteria. And of course, I can show exactly, all of my scanning criteria because it's kind of proprietary for the system. But I also include, all of these moving averages. I include some percentage moves. I include my custom momentum linearity indicator. I include a lot of stuff. And I get, for example, today we got only 27 on the bullish side. and we got 23 on the bearish side, but we didn't took any trade just because of the fact that Spice and Q are trying to break out at the moment. They couldn't do it. Of course, we didn't have any setups. Right now, we are in this corrective fashion on all indices. So, taking once the indices are just riding along all of the moving averages, the 80, 20, and 50, and they're just flat, going around it in a range, it's very hard to make money. So our system get us, out of the market. But right now, we on January, I'm going to show you to right now on the how January is actually following through, and we are making a profit at the moment with just 3 short trades we took on the 6th of January. And in fact, let me just show that really quick right here. So I have to do the same. I have to stop the screen and present again. So here it is, Chrome tab. It is right here. So this was the signal report where I sent out to my subscribers for the 3 short trades we actually did on January at this moment. And just to show you also where is the partial short tab. This is the partial result for January. It's been super choppy. I know a lot of people are not making money. So the fact that our short trades are actually profiting a little bit over 1% is cool. Of course, I expect next Monday to have a lot of trades because obviously, it's just 3 trades for the month. We are in profit, which is very good considering market conditions. But I expect a lot more trades coming up on this second half on January. And it's going to be pretty awesome. Of course, the Monday, markets are closed. But Trump is getting into office, and they say it's going to bring a lot on the first day, new laws and everything. So if I have to guess right now at this point, I would say that we're probably, if the Trump news are going to be positive, we're going to have a big gap up on the market, and we have a lot of setups to the upside. If not, probably going to get a lot of shorts once again and get that second wave of shorts. But my breadth indicators are showing that bearishness is actually ending. It's very close to being flipped to the bullish side. So that's also very good. I send a, let me just put this right here. I send my, on the weekends, I send my weekly market insights, which is a video I send to members showing the performance of the signals. I show my breadth indicators, my outlook for the markets and everything, just, to keep people cool where we are in the cycle. So right now at the moment, this week, we didn't have any trades because if we were to start placing trades, we'll be losing money. And we are up on the month, obviously. So that's what we are going to do, continue to execute the signals and make money. That's the whole point of this. Is there any question, Russell, or something?
Nope, don't see any questions, but I totally agree with your thesis that, it's better not to take trades, that are going to be losing trades, and just play it safe and make sure that you keep things safe.
Yeah, obviously. So, we have a free trial if people want to check that out. It's a 3-week trial where you can join the service, you can trade out, you have one-on-one support with me also. And the whole point of this is just to give you the chance, at least it is a 70% chance that you can make money on the trial before you have to start to pay off pocket for the signals. And even then, if you have, a decent size account, the signals are really nothing to compare to what you can make. Obviously, I have clients that have $100,000 accounts and they just made over $1,000, in January. And, the monthly fee is $89. So you go figure, that it's really nothing. But I give you, the 3-week trial and an option for people to really trade for the sums for free, just so that they can know and experience that all of the monthly reports on my site, they are real trades, they are signals that were sent and executed, and you can just follow through, and grow your accounts, which is the whole point of this. So we also have quarterly and yearly plans with discounts. So if you join yearly, of course, you get like 2.5 months off from the year, which is very cool. And a lot of guys actually, once they start making money on the monthly, they opt to go for the yearly because obviously they make money and they pay less. So it's a deal,
Cool. We do have a question. If you want to take another question at this point, seems like a good point. Yak says, is the return on cash or margin? How much leverage is used? Good question.
Awesome. Well, naturally, another important concept is that once you join Deliver the Signal, you get access to the owner's manual, which is a 20-page manual where you get everything that not only how to work with the signals, how to execute them, but also it's a full education on trading. I trade, trading mindset and everything. And I showed there the risk management section, how much you should be risking per trade. And naturally, you will be opening a margin account with your broker because we're going long and short. So by going short, you should have a margin account being able to do that. And the leverage we use is Reg T margin, which is a 1 to 2. So it's not too much leverage being used. It's just, regular Reg T, which is, if you are opening, a position on a stock, you need 50% of that in cash in your account. So it's not over leveraging or anything like that. And naturally, sometimes we get over 160% on margin. But, on every single trade, the risk is controlled, whereas risk no more than 1% per trade. And also once the trade moves to a relationship from entry, a 1-to-1 from the stop loss size, we move the stop loss to break even, so we take even more risk out of the table. So everything is really controlled. My focus is risk control. So, there is nothing dangerous here as long as you do what I say in the manual. There is really no problem. It's no danger. You're not trading with big margin. You can't wipe out your account in a single trade or something like that. It's not going to happen here unless, Apple goes bankrupt, overnight, which I doubt. So stuff like that. But,
what is your allocation roughly? Like, how do you decide on your allocation roughly? Do you do like a 5% rule or 10% rule or 3%? Like,
I get your question. We aim for a 1% risk on the trade from the entry point to stop loss. So depending on the volatility of the stock, it's going to automatically get adjusted. So for example, if we're trading, I don't know, Nvidia, which is highly liquid, it doesn't move percentage-wise that much, but it's super liquid. We might position ourselves, I don't know, 70% on the stock just to risk 1% on that trade,
Right.
And for example, in a stock that, for example, KULR, which I showed the example before, which is low priced, we might get in with a 7% of our account on that trade to risk 1%. I can't remember the exact number, but I think it was a little bit over 10%. I honestly can't remember, obviously, but it was much, much lower than that. But we're still risking 1% of our accounts on the trade. So my rule automatically adjusts your position size to the volatility of the stock, so you don't have to think about it. That's pretty cool. Again, I focus 100% on risk management, so for me, it's risk management first, 100%.
Yeah, definitely. That's how all the successful traders end up doing it. It's always the way. It's always the way. The people that aim too high are the ones that usually fail. You've got to have this conservative, consistent, rule-based approach that just like a robot, over and over and over again, and that's what you've got. So it's what's like really exciting about this strategy, that's for sure. So you showed us some longs. What are your shorts like? I'm looking at a short, I think, on the screen at the moment. Is it just kind of similar?
Let me just walk you through. Well, I'm going to walk you through the winning trade we had in January, if that's cool. So just to give you a recent example.
Yep, sounds good.
Let me just change this. Did I saw another question on the screen, Russell, by the way?
Yeah, I was just saying I'll get you to answer it. I didn't want to interrupt you, but I'll put it back up. So
yeah, sure, you can bring it. Don't worry.
So here is curious, does your return include margin interest and borrow fees?
Great question. No, it doesn't include margin interest. In fact, most of the time we are in cash, like we are right now in the past week. Interactive Brokers is paying almost 5% interest on margin, and it's paid daily. So you take the rate daily, and they pay you. I don't include that. I don't think it's part of the system. That's why I don't include it. And borrow fees, I also don't include them. But when we short, and that's one of the filters of our system, is that we short super highly liquid stocks that have very low borrow fees. We are not shorting some, penny stock that everybody's trading this week, and the brokers notice that and they start charging like insane amount of fees to borrow. We don't mess with that. If we're shorting something that it's highly liquid, has a lot of open interest on both sides. So borrow fees are really nothing. And the margin interest, I don't count it either. I don't think it's part of the system. So, interest rates right now are great on Interactive Brokers on your cash margin account. But, maybe next year we get all of these rate cuts. There is no great margin paid. So I don't want to include that in the system. So that's a good question.
Yeah, a lot of detailed questions. Thank you guys for all
I love
your very detailed questions.
I love
It
it.
shows a deep interest and deep understanding of what we're talking about here,
Yeah.
which is good. Normally, we don't get these detailed questions like, tell me exactly what this is. Tell me exactly what this
Yes.
is.
I love it because they're very, there are questions that not everybody asks, and there's questions that people that trade. That's what I love. These are questions that people that actually trading and they know what I'm talking about. So I love to take those questions, and I have to, also make an honorable mention to the guy that actually point out all of the numbers on December report. You are awesome. Yeah, so attentive to detail. It's pretty awesome. I love it. I love it. Can you see my screen right now?
Yep, we're showing the chart of. Can't see what ticker it is. It looks like.
Awesome. This is First American Corporation. Can you
Yeah.
see it right now?
Yep, can see it clearly.
We took a short. This is one of the 3 shorts we took. We shorted this particular stock, individual stock. We also shorted 2 ETFs, one of the real estate market and one on this SPLV. I just showed the monthly report of the partial for January, but this is a short trade, and this is a great example to show. Right here, this was the volatility contraction on the pattern itself. You can see that we came off from a first leg of the move, and the best shorts actually come from a top. So when when the stocks are actually making new highs, and then we get that first aggressive drop to the lower side, and you get the 80 below the 20, below the 50 exponential moving averages, and we also get our momentum linear indicator flashing green, and we get all of the characteristics on the consolidation itself that we want to look for. For example, it's not closing above the 20. We have a lower high right here, so this is just showing volatility compression. We have more than 7 candles. And another, a little rule that I want to give out. I don't want to give out every single rule, but the consolidation should be touching at least the 8 exponential moving average. If it's not touching at least the 8 EMA, it means that momentum is too extended, and those breakouts tend to snap back quickly if you try to enter them, because it's getting really extended on the higher time frames. There's a whole explanation on that. Again, I could be talking about 1 hour on that also, but this is just another point that it's derived from data, from studying thousands of stocks. I spend, just for people to know, I'd spend so many weekends and weekdays of my life saying no to my friends, to, if parties and everything. I just stayed there on my own computer, in my house, just studying charts, watching charts. I mean, I was a chart addict for so many years, but now it's paying off. Obviously, I don't regret it any single bit. But everything I'm showing you, every single rule is derived from data. So 100%. This was the breakout day right here. We took a short on this day. And this was, the FIF was one of the profitable trade of the month that I really made it. With the other one closed a little bit with a loss, and we at a break even. But we took a short, we held for 5 days, and we closed right here at the close of this day, on the 5th day. So this was a little bit over a 1% gainer. And of course, you can see that it really stretched all the way down to almost a 3%, almost a 3% gainer of open profit. But then it snapped back, and then you might say, well, why didn't you sell at the bottom? Well, first of all, we never know where the bottom is, and I stick to my rules. I know that selling at the end of the 5th day, in this case, I gave up some profit, but if I show you right now, for example, this Wells Fargo chart, which, by the way, banks are getting great earnings and they're pushing the market higher. They will in the next coming months, which is great. But you'll see right here on this trade, I have it marked up right there on this Wells Fargo. This was on the 24th of February, 2020. This was a time where I knew people that were getting 10, 20, 30% of their accounts getting wiped out by the day, which was really insane. It was an insane moment. And you can see same trade here. First leg of the move coming off from a top. The best shorts come from after a big move after stocks actually make tops. First leg of the move, you have the consolidation, you have the breakout candle. This was an example, Russell, that somebody was talking about of allocation. I think it was you, that we are risking a 1.23% on the position. So this Wells Fargo trade require a lot more capital than just trading KULR, just like I showed before, to get that 1% risk or at the high of the day of this breakout candle. And we closed at the end of the fifth day, and you can see it was a 7.25% gainer on February 2020. This was during COVID, where, of course, again, it continued to go lower, but you never know if it's going to go lower or not. This is an example that I sold right here, and I got out with a nice profit. But if I was still holding it, I would have made, like, I don't know, I could have made 50% of my account, but you never know that. That's the point. If I continue to hold it in normal conditions, it would just snap back and get into my in 2 days. You have to trade against the data. You have to follow your rules. You have to derive your rules from studying the markets, study thoroughly the markets, come up with your rules, and just stick to them. I know my 5-day exit rule gets me the profit in, I would say, 90% of market conditions. I'm getting out with a nice chunk of profit. That's the point right now on January. The markets are super volatile, but we managed to get some shorts in and get our accounts into profit, and we're profiting. I have a lot of guys that have big accounts on 1%, on these market conditions. It's big money. It is.
Very good. More questions. So from Mike again, how are you scanning for volatility expansion? Are you looking at the Bollinger bandwidth or the TTM squeeze? Like, what's your thoughts on that?
Awesome questions. But I used to use Bollingers. They are a great indicator. I believe Bollinger bands are one of those indicators that are super cool. I mean, if you manage to read the book on Bollinger Bands, the creator of Bollinger Bands, it's an awesome book because Bollinger Bands can be used for so much, and it tracks volatility, contraction, and expansion. What I do is I don't scan for the volatility expansion. I look for volatility contraction. First of all, I scan for stocks that get the golden rule. So we get the exponential moving averages working together. I have my custom indicator, which is the big thing here, is that it tracks momentum and volatility at the same time. So once I get those stocks that are prime in a trend, I then manually look for the consolidation, which I have a lot of rules that if any of those rules get broken, it would automatically get cut out of my scan. I have, like, if somebody knows TC2000, I have like a big chunk of mathematical, things I actually wrote to get this as seamless as possible for me to scan many stocks at the end of the day to later send the signals and enter the trades on the next day. So I do all of this work overnight. And so to answer your question, I don't actively scan for volatility expansion. I look for volatility contraction manually on stocks that are primed to break out to get that volatility expansion. But when I scan for that, obviously I'm scanning for that big breakout candle. So that is included in the scans, so that I don't get just too many stocks, that they're not breaking out at the moment, obviously. So I don't know if that answered your question directly, but it's a great question.
Yeah, Mike, let us know if that makes sense. Sounds good. And one thing you mentioned is, I don't know if we talked about this just yet, but you're talking about like what your thoughts are going forward into 2025. Obviously, 2024, you had an amazing year, 106%. It's insane. Trading stocks, that is just swing trading stocks. That's a great performance.
Yeah.
What's your thoughts about? Was that a special year? I know it's hard. Nobody has a crystal ball, really, but like, what's your thoughts about this next coming year? Like, how are you going to play this differently? Is it anything?
Yeah, I get your question. First of all, 2024 was not a special year by any means. It might seem like it, but we got a lot of volatility in 20. In fact, I made a lot of money from shorts, and that's an indication that there was a lot of volatility in 2024. Although the first part of the year, you can go and check the reports, we had longs, but we had a lot of shorts also. So again, that shows volatility, and we profited from it. So I don't believe it's any special year by any means. I mean, for the next coming months, I would say that my outlook I have two type of outlooks: the one for the market itself and one for myself. For myself, I know I'm going to be profitable because I just follow my system, and I know I'm going to get 87% of the months profitable. I might get more or less than I get on average. But if the market starts in a bear market during the whole year, I know I'm going to be selling into those rallies. I'm going to get a lot of short signals. I'm going to profit. If we get a long bull market, which I believe is going to be, my expectation is that this
Yeah.
bull market is going to continue. I believe that we are within the bigger cycle in a secular bull market. We are going to get corrections. We might get a 2 to 3 month correction here and there, one or two. I believe they are going to happen on the markets eventually, and those corrections are needed for the bull market to continue. So that's the whole point. I mean, they are needed, and once we get those corrections, I love it when once we get a correction after a sustained bull move, because the short trades that happen at the top are insane. You can go and check and pull up a chart of Qs or SPYs of 2024. Look at the monthly reports and look where the market is actually topping. We get a lot of short trades when the top is happening. So most people think that the bull market is going to continue, and it's continuing, but once breadth tends to deteriorate under the surface before the indices does, and before it really happens in front of people's eyes. Once breadth starts to deteriorate, we get a lot of short trades, and we just get on and just ride the wave. That's why we get months, we get a lot of long and short trades, and we profit on both of them. That happens on when the market is actually topping. So right now we started with a correction. I believe that this correction at this point, kind of hard to decide what is going on, but it seems kind of choppy. I believe that on Monday, once Trump gets into office, it's going to be something different. I believe on Tuesday we might get, honestly, either a gap up or a gap down. So I don't know what's going to happen. We're not holding positions at the moment. We're waiting for the next wave of signals to happen, which will happen once we get a resolution. But that's my expectation. I believe ultimately we are in a bull market. We're going to get corrections, but ultimately 2025 is going to end up higher, 100%. It's not 100%, but I believe that it's going to end up higher. But I'm just going to follow my signals. If I follow my system, follow my signals, I've been doing very well for the last years, and I know I'll continue to do so, regardless of the market really happening. So it's no problem for me, honestly, to be honest.
Yeah, and it sounds like there's so much goes into this that it's definitely worth paying for. So we should probably talk a little bit about what the pricing structure is, how people can get through this without, having to deal with all the work that you've done and that you're doing on a daily basis for them in order to help get them going. Before we do that, let's just do one last quick question here from
Awesome.
Mike. Do you monitor sector rotation, selecting stocks in favored sectors, or is your system totally based on technicals? Good question.
Yeah, awesome question. Many years ago, I used to look into sector rotation and everything, but the way my system is designed is that it will get me in the sectors that they are moving, and it will get me, either long or short. So I'll give you an example. Right now, I shorted 2 ETFs, which were, it was a low volatility SPI ETF, it was a real estate ETF, and one individual company. I don't look at industry groups, but the signals themselves, just because of the way they scan for money getting in or out of the market or selling, just by scanning for that, if you just look, if you look at my scans at the moment, the only strong stocks will be AI and quantum computing. It's just there. I don't pay attention to that, but everything is integrated by default. I used to go through all of the, 6, 7 years ago, I used to dive into that stuff. And to be honest, it always got me behind the curve. I was always looking at sectors, but then when I was looking at a strong sector is already gone. That's the point. That's the whole point. Once a sector is strong, you're late. You want to get in before the sector is strong, or as the sector is starting to get strong. That's why my system gets me, and that's another rule on just the first consolidation after the first leg of a new trend. If you start to trade consolidations later into the trend, you have a much higher risk of really just getting stopped out, because volatility is going to be higher and you're just getting late to the party. That's, this is a zero-sum game. Everybody in the stock market is here to either buy something and sell it higher, or is here to sell short something and buy it lower. Nothing else. Nobody is hedging. Nobody is doing, every single one in the stock market is here to make money. On futures, you have a lot of people and companies, that they buy and sell commodities, maybe to hedge things from their companies or whatever, and currencies. But here it's all about, it's a zero-sum game, So I don't recommend tracking, all of these industry groups because you're going to be late most of the times. It's just a reality. It happened to me. So I'm not saying this to bash the idea, but it's just from personal experience. You're always behind. You're always falling behind. That's my experience.
Interesting. Yeah, definitely. Makes sense. Makes
Yeah.
sense. Yeah, for sure. So it's obvious over the last hour that you know what you're talking about. I mean, it'd be hard for anybody to have listened to this last hour and not realize that you know what you're talking about through hard work, a lot of hard work by the sounds of it. And
Yeah.
it's work that you've done for them, and the people that are maybe signed up for the trial, or maybe want to sign up for the trial. We should probably talk a little bit about that before we call it a night and see if there's any more
Yeah.
questions. So,
100%. Yeah. Well, first of all, how liver signal works, it's very simple. I think we didn't mention this, but essentially 1 hour before the market open, you just get a daily email, just like the ones I showed you. In fact, I'm going to show you right now. This is an email that you can get. This is one that was sent out, today morning. So you get an email from me 1 hour before the market opens. Very important. From here, you download the report, which I'm going to do. I give out a daily brief of what the market is really doing. I talk about my breadth indicators, what we're seeing, what happened yesterday. So people can get a sense of where we are in the market cycle, what breadth is doing. I mean, how it's behaving, to get a sense of where we are overall, which is very important. And then you get right here the signal itself, you download it, and you get the report. You get the partial profit report for the month. You get the trailing 12-month performance to keep an eye on the last 12 months, how it actually been performing, which is very important for perspective, obviously. And then you get today was no trades to open, no trades to close. You will be advised when to close trades at the end of the 5th day, by the way. So this is what it really looks like. So once you join to get this, you will get this in the morning, 1 hour before the market opens. On the manual, you will understand how to take all of these numbers that you get from the signal and put it on your brokerage account. And then you just, go about your day. You don't have to do anything else. Everything is automated because the orders are set as limit orders for entry with a stop attached. If the order didn't get filled in the first 1 hour, it gets automatically canceled. So you don't have to do really anything if you set it right. And you just go about your day, and you get included the one-on-one support with me, which I over-deliver. I answer every single email I get from people. I try to help them on their personal situation with their trading. I have a lot of experience I want to obviously share. So you also get the weekly market insights every Saturday or Sunday. This is a video where I do a market review about everything, so you can get again a sense of where we are on the market cycle. We review the signal performance and everything, so it's pretty cool. So pricing is really simple. You have the 3-week trial, which I suggest everyone goes through because you can experience the service itself and just be aware that if it's for you or not. And there's a 70% chance that you'll make money during that process, which is pretty cool also. And if you join yearly, you get a 20% discount, which is around 2.5 months of the year. And you save $228, and you have the quarterly also as a 10% if you want. And the whole point of this is that for you to get onto the service and for you to make money before you have to pay off pocket. That's the way I think about it. That's the way, and I believe that if I put up a 3-week trial for people to try it out, I have nothing to hide. Of course, you can just join. You can see that the monthly reports generated on the site are real. These are real trades. You will see trades that are sent that are not executed. Just to give you a quick example, if there was a trade that, unfortunately, it didn't get triggered on Tesla. It was a big trade on December. Can I share my screen quickly?
yep, you can do your usual switch over if you want.
There I have to just to show you that there are trades that go out in the signals and they're just not executed. That's part of the game. And all of the monthly reports that you see on the side are signals that were sent and executed. This was a trade that didn't get filled for like 10 cents, which Tesla 10 cents is literally nothing. And it was a 1-to-5 risk-reward ratio. And this was on the 5th of December. So if this trade would have been triggered for 5 cents, we were talking about a 7% month on December. So there are trades that are not going to get filled, and you're going to see that if you go through the trial, that everything is super transparent. The profit reports are real. So that's the whole point. This is all about transparency for you to trade out for free. And the whole point is for you to make money. So I'm there for you. I support you. So literally, I believe I don't want to disrespect, but it's kind of like a no-brainer. Just try it out and see it for yourself. But yeah, this is it. This is it.
Yeah, so check out the link in the chat here if you're watching the replay, which most people will be because more people watch the replay than come to the live,
Yeah.
which is disappointing because the lives are great because you guys can ask questions like you have been doing. But a lot of people will be watching the replay. Check the description and I'll put the link to Felipe's website, and you can check out the pricing options and all the information, including the 3.5 hour, was it 3.5 hour course that you have on there? It's like,
Yeah. I have a 3.5. I believe it's 3.5 hours. Yeah, where I show everything I showed here, but in extreme detail. And I
yeah.
also have a section. I have a section with articles and videos, and I also have a link that you can follow me. People can follow me on X, where I post daily. I post a lot about trading, being a trader. Helping people out. And I also post all of the results of Liberty Signal. I post it there also with the monthly reports, the trades, and also the market updates that I'm seeing, what the market's really going, and my thoughts. I just put everything in there. So if you follow me on X, for everyone, you can check out on the link and go to the site, and you can go on the learn section. That's going to be a link there to follow me on X as well, which is pretty cool. It's a good supplement.
Sounds perfect. Well, thank you for all the information. It's been pretty informative to me, and I hope it's been informative to other people. Is there any other questions before we wrap up? Just let us know in the chat.
Yeah.
People are going to go quiet again, so we'll see if there's anybody got
Yeah,
some.
it's a shame because most people that later talk to me, and join the service, they watch the replay. They don't get to ask questions live. So but it is how it is. It's kind of difficult for people to just be in an hour. It's not easy. It's not easy at all.
No.
I would be much more of a watch a replay guy, to be honest. I prefer to watch replays 100%. Yeah. So, but it's good to be there to answer questions.
Yeah, for sure.
Yeah.
Well, it doesn't look like any more questions are coming in, so we should probably wrap it up there. Hopefully we get some more people signing up for your service because it's one of the best I've ever seen, especially from a stock market point of view. There is one last question. We'll do one more. It's from Mike again. It's another really good Mike question, so let's do that, and then we'll go.
Awesome.
So here we go. Can you see it on your screen?
Awesome. I see it. Well, it's kind of proprietary. Yeah, it is. But I can give you the concept is very simple, and you can replicate that with your own metrics if you want. So because the concept is important here. So what I like to see first of all is the advanced decline line. It is a very old school indicator. It was used on the 80s and everything. I know that, but it's super reliable. The advanced decline line just tracks, the difference of stocks that advanced for the day minus the stocks that actually went down for the day. And if it's a positive day, more stocks went up, it gets up the value on the line. So it, has an uptick or a downtick if it's more. It's very easy to see breadth when see huge breadth declines. It's very easy to see. You can literally predict a lot of bear markets just by looking at advanced decline line. But for a more day-to-day thing and more practical thing, I use on TC2000 actually. And if I can share, I have a screenshot of that, which I send on my daily briefs right here. Share this tab right here. This is a 2-column scan that I use on TC2000, where basically what I look for is I scan for stocks on perfect uptrends, which have, those are stocks that are the 8 above the 20, above the 50 exponential moving average, prices closing above the 20 exponential moving average. We have the custom momentum and linearity indicator green. And there are a couple of more things, I believe. I have a liquidity criteria. I have a price criteria. And it really just scans for perfect uptrends and downtrends. And if you have more perfect uptrends, that just means that there are more stocks that is money going into them. And if you have more on the negative side than the long side, it's because it's a lot more bearish in the market and there is money either selling, getting out of market, and people going short. So, and you can see that I sent this out today, and you can see that it is very close to flipping actually. I believe this was the close of yesterday. Today's close is even closer. It's very close to actually flipping to the bullish side. We'll have to see that again. I believe it really depends on what happens on Monday once Trump gets into office, what is going to happen. So I believe we're either going to get a big gap up or gap down, and breadth is really, really at the point of equilibrium. So we have to see what really, goes about it.
Another quick question.
Right now, My questions, I love them. I watch the AD lines for the major sectors. Do you like the issues indicator or volume indicator? I don't really look at it. I know there is an advanced decline line that weights by volume. I know that what you're saying, but I prefer to just stick to the overall AD line, the old school, the one that tracks the NYNC, I believe it is, and Nasdaq, I believe they're included. Just the old school indicator is the one I use, and it's pretty reliable. I know that you can use AD lines for different sectors, but again, I don't track sectors by themselves. I didn't have a good experience with it because I'm always falling behind. That's why I don't use that. But if you are successful doing that, you can absolutely use that also. So it's no problem. Excellent question again.
Yeah, Mike knows his stuff. That's for
Yeah.
sure. Mike knows his stuff. Um, anyway, let's wrap it up there. I think we've given so much information out here, and I hope you guys see the value in Felipe's service and go and check it out and let us know what you think. And you've got 3-week trial if you need it. I know a lot of people just jump on the yearly. That's what we found from a couple of weeks ago. People just buy the yearly because you can tell that Felipe's the real deal, and you get the discount on the yearly, and it's still not very much money. So a lot of people just jump on the yearly.
Yeah, and I believe everything is built on transparency. So the returns are there. If you join the trial, you can see that the monthly reports are real. It's just for me, it's like I'm showing everything. There is nothing that I'm hiding aside from some very specific, custom indicators or things. But aside from that, it's just it's super super transparent. So I advise everyone to take a look at the trial if they want. And also, if you come right here to my side, you can see the 4-part video course right here, article and video libraries, and you can follow me on X also. So that will be pretty cool. So if you want to follow me on X, a lot of great content also for you.
Great. All right, sounds good. Looks like all the questions have dried up. Don't say anything, Mike. You're not asking any more questions. We're done. So
bring it on.
We
love my questions.
Be pretty good.
Was Mike the one asking, looking at the November reports?
Sorry, what was that?
Was Mike the one asking about the November reports, and price not making sense and everything?
At the start, you mean?
Yeah.
No, that was somebody else. There was a couple other guys that were asking about that were looking at. Mike came in a bit later, I think, and started asking much more sophisticated questions. So,
awesome. I love those questions. I love them.
Yeah, that's pretty good.
Awesome.
All right, guys. Well, thanks for listening. And Felipe, thank you very much for your presentation again. I learned a little bit more about some of your stuff. And apparently you're going to get some more questions via email from Mike, so look out for those.
Awesome. I love those questions. I love it. Awesome, 100%.
All right, guys. All right, well, enjoy the weekend. Thank you guys for turning out on a Friday night. I know it's been a tough week, and it's sometimes hard to come to these types of events after a week of trading and working and just, all that nonsense. So it's been good to see a lot of people here talking and asking good questions and having a good dialogue, and I've enjoyed it, and I'm pretty sure you have as well, right? It seems like you've enjoyed yourself.
I love these streams. Yeah, I love them. I would love to, if I get more questions. I love them. Those complicated questions, I love them. Yeah.
Sounds good. All right, guys, enjoy your weekend, and hopefully you can talk to Felipe about joining a service and getting some of these trades spoon-fed to you, but also learning how they work as well, which is really key. Yeah. So good. All right, man. Thanks very much for your time. Thank you very much again for being here.
Thank you for having me here, Russell. Thank you very much.
Yeah, no problem. And I will talk to you soon. Have a good weekend, guys.
Awesome.